Assalamu alaikum dear student. It's time to discuss test 2 of ATX. I strongly believe that every one of you have attempted this test 2, or you can say assignment 2, and now you are watching this video lecture. I'll try my best to keep this video lecture as, I would say, short as possible so that I should not be taking much time. Okay, so let's go for it. Just a minute. So it's 25 marks question. We know that 5 marks are professional marks. Required. Explain whether 1. A company share option scheme CSOP and 2. Share incentive scheme will satisfy Yacon Limited's criteria for the tax advantage share incentive scheme and income tax implication for the employees of acquiring the shares in each case. 8 marks. To be very honest, dear student, if any one of you is having a really good understanding of CSOP and SIP, that person should have taken at least 7 marks out of 8. All you need is 1, you should be having a really good understanding of CSOP and SIP, and second, you need to remember, you should memorize the main points of these schemes. Because if all the conditions are met and the scheme is approved share option scheme, then we know that on granted there is no tax on on exercise, then on exercise date there is no tax, but we need to understand what is after that. So explain a company share option scheme, CSOP and share incentive. Okay. Calculate, and we know that on disposal date you will be getting, on disposal date there is going to be CGT. But before doing this, let's read all the requirements. But again, let me repeat, any one of you who is having a really good understanding of CSOP, SIP and remembers all the rules should be getting a really good marks in part A. Calculate with brief explanation the private residence relief PRR and letting relief which are available to reduce the chargeable gain on Daikon's sale of his house. 7 marks. Again, if someone is having a really good understanding and you have practiced the private residence relief rule question, then this should not be a problem at all. 7 marks. Explain the inheritance tax implication of Jicama's gift of the apartment to Daikon on 5th June 2021 if Jacima were to die on December 2026. It means this donor is dying within 7 years. If the donor dies within 7 years, then PAT becomes chargeable, then death tax applies. But if the donor dies after 3 years of making the gift, then on death tax taper relief is available, which reduces the IST payable. Now let's read the question. You should assume that today's date is 1st December 2023. Okay. Daikon, the managing director of Yacon Limited, has requested advice on the tax implications of Yacon Limited setting up a tax advantage share incentive scheme for its employees. He also requires advice on the capital gain tax reliefs available on the sale of his house and potential inheritance tax liability arising on the gift of an apartment. Yacon Limited is a UK resident unquoted trading company which is not part of a group. Is considering setting up either company share option plan CSOP or a share incentive plan, both of which would be offered to selected employees. Both will be given to the selected employees. Okay. Yacon Limited, criteria for tax advantage share incentive scheme. Criteria. They are giving us a criteria for share incentive scheme. Let's see what they are saying. Employees will be selected to join the scheme depending on their period of employment with the company. Period of employment with the company. When it, okay, let me read this, then I'll tell you. If the scheme is CSOP, each employee will be offered option to purchase shares worth up to £3,000 each year. Employee will exercise the options 5 years after being granted. 5 years. If the scheme is SIP, share incentive scheme, each employee will be given free shares up to worth £3,000 each year. Employees will remove the shares from the plan after 5 years. Now listen and listen carefully. Actually, what points you need to remember for CSOP? Basically, number one point which you need to write that on at grant date there is no tax implication. If all the conditions are met, then on exercise date there is no tax implications, and then disposal date there is going to be CGT. Okay, but right now if I discuss on the discussion relating to CSOP, they're saying something. They're saying employees will be selected to join the scheme dependent on their period of employment. Actually, when it comes to CSOP, when it comes to CSOP, when it comes to CSOP, then obviously it is up to the organization whom they really want to give this share option scheme. So it means in CSOP they can select the number of employees whom they really want to give CSOP. Another point, the maximum value on, if I say on the maximum value of the plan under CSOP for employee is £30,000, and they are talking about £3,000, which means it is very much within the limit. It is very much within the limit. Another thing relating to the holding period, they are exercising after 5 years, which is perfectly fine, because in case of CSOP, you should be exercising. Your exercise period starts. It is between 3 to 10 years. In CSOP, it is between 3 to 10 years, and you're talking about after 5 years, so which is again perfectly fine for CSOP. So actually what I really want to say, dear student, you need to remember the rules of CSOP and SIP. All you need is just write all those rules, and right now everything is within the prescribed rules of CSOP. For example, just a minute, look at this. Every one of you must be having these notes. You can read CSOP. Company share option. This plan holds following characteristics. Employer can include selected employees in this plan. Those employees must be full-time, and there's this maximum value of the plan is £30,000, and maturity period is 3 to 10 years, and they will be exercising after 5 years, so perfectly fine. No problem at all. So when it comes to CSOP, everything is perfectly fine. Now let's talk about SIP. Following are the characteristics of this plan. Plan must be open to all full-time employees. You have to give this plan to all full-time employees. If you want, you can specify the minimum period of employment limit, and that minimum period of employment limit, if you want, you can do that, but that minimum period cannot exceed 18 months. So it has to be within 18 months. So the minimum employment period can be added. It is not included in the notes in CIP, dear student. You can incorporate that. The minimum employment period can be added, the condition in SIP, but that minimum period cannot exceed 18 months. Okay. Under SIP, you can give free shares up to 3,600. Over here, the question says £3,000, again within very much the limits of SIP. Another thing, if sold after 5 years, then no tax, neither employment nor even CGT. So in case of SIP, you will be selling after 5 years. So logically there will be no income tax, no even CGT in case of SIP. So to be very honest, all you need is, dear student, just try to memorize these rules of CSOP, SIP, just write them. You will be getting a really good marks. This is simply you should be writing for part A. Just write the rules of CSOP and SIP. Only one point I've added. That one point is the minimum employment period condition can be attached in SIP, but that minimum employment period cannot exceed 18 months. So simply that is part A. Now let's discuss part B. Calculate with a brief explanation the private residence relief and letting relief. Now let's see. Daikon was gifted an apartment by his aunt Yacon on 5th June 2021. Has never lived in this apartment. Will sell the house he currently lives and move to this apartment on 31st December 2023. Sale of his current house. Daikon purchased his house on 1st July 2015 when he was employed overseas. When he was employed overseas. So Daikon purchased his house on 1 July 2015 when he was employed overseas. That's a very, very important point. Look at this. Daikon purchased his house on this date when he was employed overseas. So while he was working in overseas, he bought the house. Okay. Daikon did not own any other property from 1st July 15 till this date. The sale of the house on December 2023 will give rise to a chargeable gain of 1,45,000 before any relief. Occupation of the current house. Daikon moved into house on 1st January 2016. Now dear student, listen and listen carefully. I did discuss that any period is spent working abroad is treated as a deemed occupation. But look at the first 6 months from 1st July 15 till December 2015. First 6 months, these are the first 6 months which will not come under deemed occupation. Why? Because actually this gentleman was working abroad and at that time he bought the house. So why the first 6 months cannot be first 6 months will not fall in exempt time period because it is not preceded and followed by actual occupation. So first 6 months of the ownership cannot fulfill the condition of preceded and followed by actual occupation. That is why first 6 months of the ownership, they're not falling in exempt months. Because he was working abroad and he bought the house. It is not the case he bought the house and then he went abroad for working. So since he was working abroad, he bought the house. So the one condition will never be fulfilled for the first 6 months, that is preceded and followed by actual occupation. That is, our first 6 months will not fall as in exempt months. Daikon did not own any. Okay. Daikon moved. So this is from where actual occupation starts on his return. Daikon has occupied the house since 1st January 2016, apart from the period from 1st July 2017 to December 2018. Daikon has occupied a house from 1st January 2016, apart from period from 1st July 2017 to December 18. So he has occupied the house actually from 1st January 16 till 30th June 17. He did not occupy the house from 1st July 17 till December 18. Okay. When he was once again employed overseas. So he went again overseas. Now the time period which he spent as working abroad, it will be treated as deemed occupation. Daikon resumed the exclusion occupation of the house on 1st January 2019. So actually the time period which began from 1st July 17 till December 18, now it will fall under deemed occupation because it is preceded and followed by actual occupation. Because Daikon resumed the exclusion of occupation of the house from this date. Since April 19, Daikon has let the basement of the house, which comprised 25% of the property, for residential use, retaining exclusive. Daikon resumed exclusive occupation. He was not exclusion, exclusive occupation So he was living exclusively alone. Since 1st April 19, Daikon has let the basement of the house for residential use, retaining exclusive occupation of the remaining 75%. Now, of course, letting relief will also be available because one part of the portion is given on the rent and second was occupied by the owner. Gift of the apartment by Jekima. I'll come to this, but before that, let's calculate private residence relief, part B. Private residence relief. I would say exempt months and chargeable months. Exempt months and chargeable months. First 6 months are chargeable months because preceded and followed by actual occupation cannot be fulfilled. From 1st July 2015 till December 15. Then so this is basically 6 months. It is absent but no prior occupation, so 6 months will not fall in uh, exempt months because preceded and followed by actual occupation cannot be fulfilled in case of first 6 months. Then actual occupation starts. For over here you can say he was absent, no prior occupation, no prior occupation. That is why these first 6 months are not coming. Then 1st January 2016 to 30th June 17, 18 months. That's actual occupation. That is actual occupation. Then after that, he went abroad for working. Now it is treated as deemed occupation because it is preceded and followed by actual occupation. From 1st July, you need to have a question in front of you. 1st July 2017 to December 18. Again, we have 18 months. This is deemed occupation. Then again, actual occupation starts from 1st January 19 to 31st March. We have 3 months. Actual occupation. This is actual occupation. After that, he has given the rent. He has given the property on the rent from 1st April 2019 till March 2023. If I count the time period, it is that is I need actual occupation. So basically we have 48 months, but out of this 48, 75% of the property was occupied by him. So basically 36 months they are exempt, but obviously 12 months they are chargeable. So repeat, he has given the property on rent for 48 months, but the 75% property was occupied by him. So 75% of 48 months actually falls in exempt months, but 12 falls in chargeable months. And after that, simply last 9 months of the ownership. Because when he sold the property, look at this. He sold the property on December 2023. So since first September, Daikon has let the basement and this. Okay, why I have stopped till 4 years? Because the last 9 months of the ownerships are always exempt months. You might be thinking why we are not counting the time period from 1st April 19 till December 2023. Actually, the problem is on at December 2023 the property was sold, and the last 9 months of the ownerships are always treated as occupation months. So that is why we have not considered 9 months here. So simply the last 9 months of ownership are always treated as exempt months. Simply last 9 months. So here comes the exempt months. 18 plus 18 plus 3 plus 36 plus 9, 84. And we have 18. So simply private residence relief. The capital gain they have already given us. The capital gain is 1,45,000. Multiply by 84 divided by total ownership months, simply 84 plus 18. 84 plus 18 gives us the total ownership months 102. 1,45,000 multiplied by 84 divided by 102. I am having 1,19,412. Okay. Now let's talk about letting relief. So number one, you need to discuss for the letting relief. One portion of the property must be occupied by the owner, and the another portion should be given on rent. Second, the letting relief is the lower of three amounts. One, the PPR. Second is the 40,000 amount. Third, the amount calculated. Third is the amount calculated. And only these 12 months, they will be treated as letting period. So basically the letting relief is lower of three values. You need to discuss that also. Let me repeat all those three values. One is principal residence relief amount, which is 1,19,412. The second, you can say 40,000 pound, which is third, the amount calculated. Simply the gain relating to letting. So 1,45,000, 12 months out of 80, out of how much? 102. 17,059. So obviously the letting relief will be 17,059. So this is all you need to discuss for principal residence relief. Now for the last point, explain with the inheritance tax implication of Jekima gift of apartment to Daikon on 5th June 2021 if Jekima were to die. Okay. When Jekima gifted the apartment to Daikon at this date, it was on condition of her continuing to live in the apartment for the foreseeable future. On 12 March 2023, Jekima became living with her sister and she removed the condition she had previously imposed on the gift on that date. So what we need to discuss, explain the inheritance tax implication of Jekima gift of the apartment to Daikon on this date. Okay. How many marks are there? 5 marks. So part C, dear student, first you need to just put the heading of inheritance tax implication of Jekima gift of apartment. Just put the heading, and after that, you can simply mention that at the time of gift, it is PAT, and the gift was given on 5th June 2021. So at the time of gift, it is PAT, potentially exempt transfer. Okay. And obviously on potentially exempt transfer during the lifetime, there is no tax. But actually this gift is gift with reservation. You need to discuss the gift with reservation. Why do you need to discuss gift with reservation? Because aunt was living and obviously not paying any rent. So it is gift with a reservation. But this gift with reservation was uplifted on 12 March 2023. Jakima began living with her sister and she removed. So simply reservation of the benefit was lifted on 12 March 2023. Because when Jakima, you can say, went to live with her sister. So it means this will create further PAT, and which would be of course valued at that time. So actually we need to recalculate the value of the PAT at the time when the reservation was uplifted, when the reservation was lifted. Another thing, if Jakima dies within 7 years of making the gift, then obviously PAT becomes chargeable. PAT becomes chargeable. But if donor dies, if donor dies after 3 years of making the gift, then temporarily would be available, which will reduce the death tax. So simply, dear student, what you have to discuss relating to IHT, that when the gift was originally given at 5th June 2021, at that time it is PAT, and no inheritance tax is paid on PAT during the lifetime of the donor. Then after that, you just need to discuss this gift was with the gift with reservation, because aunt was living in paying no rental. Second, when the gift was when the reservation was uplifted, then it further creates a PAT on 12 March 2023. When Jakima dies on 26 December 2000, when Jakima dies on December 2026, since the donor is dying within 7 years of making the gift, then both PAT becomes chargeable. The PAT on 5th June 2021 and the PAT which came on 12th March 2023. Obviously, whichever PAT results in a higher tax, HMRC will opt that, because it is a case of gift with reservation. So it is up to the HMRC either either to calculate, either to treat this gift at 5th June 2021 or treat gift on 12th March 2023. Obviously, whichever uh, PAT on PAT either PAT on 5th June 2021 or 12 March 2023, wherever the IHT comes higher, simply HMRC will follow that. So there is actually up to the HMRC either to treat PAT at 5th June 2021 and do the calculation, or go for 12 March 2023 and do the calculation. Whichever results in a higher IHT, higher taxation, HMRC will follow that. So dear student, gift of the apartment, you need to discuss the gift with reservation as well. So in this entire question, actually this sort of question gives you the idea that if you have, number one, understood all the rules and conditions relating to different topics, plus you need to memorize them also. If you remember all the rules, then definitely anyone who is having a really good command on CSOP, SIP, principal residence relief and letting relief and IHT should not be having the problem in this question. It is I would say, the difficulty level of this question, I would say decent. It's decent, it's moderate, it's not very high, it's not very low. So thank you very much. I really want every one of you, after please watching this lecture, I want every one of you try to draft the answer. Second, after drafting the answer, every one of you must read the answer of this question from your Kaplan kit at least 2 to 3 times. at least 2 to 3 times. If you don't have the answer of this question, you can always ask and WhatsApp, ask the admin to share the answer of this question with you. So thank you very much watching this lecture. Very soon I'm going to share test 3 or assignment 3 of ATX. So thank you very much watching this lecture. Have a nice life.